on the call with us. I'm currently looking for 50 to 80 unit C-class apartments here in the Houston area, as well as some other submarkets outside. Full-time, I am a valuation analyst for business and industrial property. My wife and I, started Argent Realty Group, so we have a small single-family portfolio that we're currently managing, which has kind of propelled us into the multifamily space. So that's my spiel. You want to go?
Hi, everyone. I'm Lynette Thibodeau. Just echo what Jarvis said. Currently, I full-time, I'm a director of student support, but we actually got married last year, and that's when I got introduced to the real estate world because that's what his family does as well. So I'm here and I'm deep in it now. So I'm glad to see you all, and I'm glad you all are here.
Tell him, Lynette, that was when his life changed for forever, right?
Yes, that is when yes.
Awesome. All right, where's Nick? Nick, go ahead, man.
Yeah, hey everybody. My name is Nick Amalexon, as we went over earlier. I'm out here in Austin. I wish we were Austonians. I think we're called Austinites, but I like the Stonian better. Yeah, I invest in multifamily as well. I have a portfolio here in Austin. My partner and I invest in Austin and Los Angeles. We're currently actually going a little south of Austin into the corridor between Austin and San Antonio. And we look really at anything 20 to 200 units. If we're doing smaller stuff, it's usually near something we own, but we're flexible with what we look at. But that's kind of our background. And we have collectively about 17 properties, 200 units in Austin.
Awesome. Abels, you're up, man.
Hey guys, I'm Abels Koshi. I'm here in Houston, Texas. Me and my partner, we're focused here in Houston. We're looking for properties that are 20 to 50 something units, specifically above the I-10 and inside the 99 loop. And then also we're focused in McAllen as well for something larger from 50 to 70 units. On my day job, I'm a mechanical engineer, so I work for oil refinery company. Or a consulting company. So yeah, and I'm excited to be in this space and really looking to, get some deals done. So
Awesome. Well, I think most of you guys know me. I'm Cody Laughlin, managing partner over at Blue Oak Capital, along with one of my partners there, Mr. Brian Alfaro, who's on the screen. He's got the beautiful backdrop there, which I've got to figure out a way to do. But anyway, we're a Houston-based real estate investment firm focused on multifamily acquisitions here in Texas, Tennessee, and Kansas City. So I always look forward to the pleasure to network with other like-minded individuals. So again, so glad you guys are here. So, but with that, we're going to pivot and we're going to get to know the host. And so we're going to talk a little bit of real estate to start it off. And Abels, I'm going to start off with you, and we'll kind of go around table here. But what was your first? I'm going to put you on the spot here. You ready? What was your first real estate investment deal, and what did you learn from that experience?
My first ever real estate investment deal was actually last year. It was I invested passively in a multifamily property here in Spring, Texas. It was 126 units. And what I learned from it was really just to know your team before you get into a deal. I kind of trusted the LP, or not the LPs, the GPs on the deal, and it's a great deal so far. So definitely know what you're getting yourself into and use it as a chance to get to know the asset better. So yes, that's my answer.
Awesome. Love it. Nick, what was your first investment deal, man?
Yeah, the first thing I bought was a single family house in Round Rock. And that was actually 2015, I think. Might have been the tail end of 2014. And kind of the thing it taught me was, I don't know if it's easy to replicate, but invest in markets where the wind's at your back, right? I kind of bought this not knowing what I was doing, but bought in a good area, which, is always helps.
Nice. Jarvis, Lynette?
So my first property was, I think it was 2013. It was a duplex in New Orleans, and kind of like what Abel said, you have to make sure that you have a good team, contractors in place, people to watch over the property and stuff, so you don't have to do the full on management, because now I'm here in Houston. But just having a good list of general contractors and your go-to guys that can get stuff done at a moment's notice was the biggest lesson that I learned early on.
Nice. Yeah, having the right team and being educated, man. It's and being in the right markets. It's all very, very important there. So, Nick, from the time that you started investing to where you're at now, what changes have you seen in the market throughout your investing journey?
Yeah, I mean, I've been looking at different stuff throughout my investment journey, so I don't know if I'm the best person to answer this question, but I've always been looking in very competitive markets, and so now it's kind of the first time I've experienced competition where rents are softening but prices are going the other direction. So I guess that's probably the biggest change that I've seen, is that we're seeing income drop, but we're still seeing prices go up.
Mm-hmm. Abels, what about you, man? It's been about a year now. What are some things that you've been noticing in the marketplace since you started?
Yeah, well, so I guess when I started a year back, I was just getting into all of this. I was absorbing as much information as I can. And I wouldn't say right now I'm like an expert in understanding, market economics or anything like that. But, going with what Nick was saying, yeah. So like, even, yeah, as the income of people are going down, you still see the price of the sale still go up. There's so much competition on the market, so definitely knowing what you want to get into is important.
Awesome. Jarvis, Lynette, how about you guys?
So I think that cap rates are definitely compressing. I think here in Houston, I was told last week like 75% of all apartments have traded in the last 5 years, which is huge. And I think that the real estate space in general, whether it be single family or commercial, is really just becoming monopolized. There's a lot of people from all over looking to get in, especially now because of the recession and everything. Is the best investment train that you can get on, in my opinion. So I think that competition is getting stiffer. I think to Nick's point, cap rates are getting compressed, and you really have to know what you're doing to kind of prevail in a down market. So.
Mm-hmm. Yeah, great. Yeah, this is definitely probably the most interesting market cycle that I think that we've come across in in any experience if you've been in this for a while. And I think if you talk to most professionals across the space, whether it be brokers, vendors, or whatever the case, I think they would probably argue the same, that it's just a very, very interesting year for sure in the cycle. But that leads us into this next great question by my friend Tony there. How has COVID affected your strategies? And Jarvis, Lynn, I'll kick it back to you and kick us off.
So COVID is interesting, right? When it first started, nobody really knew what was going on. And then you saw brokers calling property owners, where before it was a little bit harder to get on the broker's list or whatever it is. And there's a lot of unknowns. I think that the better areas have sustained or have been able to be stable, and the rougher areas, I think there's still opportunities out there, but I think we're still in the middle of the unknown. I don't know if the bottom's dropped yet or if it will. I think there's a lot of unknowns going into 2021 and the end of this year. So we're kind of just doing a little bit more conservative underwriting just to make sure that we don't get into anything or into a sticky situation. But other than that, we're just trying to stick to our guns and find something good for our investors.
Yeah, I think what I would add to that is we've noticed, just to his point, banks are getting tighter on their requirements. And I think people are just, feeling more conservative. And so we've kind of pulled back and just know the importance of saving up and having like a lot of, capital in order to invest, because the requirements are getting a little stricter as well, to get in the door.
And a lot of the passive investors, they really want to, put their money somewhere that's safe. And, I think it's giving them time to really learn, study, and know exactly what they're getting themselves into, accredited or sophisticated. So I think everybody's just really taking this time to learn the game right now too.
Yep. Nick, how about you, man? How has COVID affected your strategies?
Yeah, are we Tony, maybe you can weigh in. Are you talking like on acquisitions or operations, or I guess what are you gearing that question towards?
Sorry about that. I'm in IT, so I always get calls.
No worries.
So really what I was looking for was, from the COVID perspective, are you seeing, is it more of a challenge as your projects advance? Are you seeing, from a financial standpoint, more of a cautionary stance from the finance, whether it's, your banking? I know you do, private financing, but just trying to understand, what that market is, and trying to understand how this is really, is it delaying you? Is it causing your projects to be extended even longer?
Yeah, I mean, personally, I'd say definitely. We had a lot of projects that we had planned at the beginning of the year, and around March, as we kind of put the hold on those. Personally, just to kind of see where everything played out. Everybody was kind of scared of where collections were going to come in at, and the end of the world was coming. I don't think it turned out as bad for us and for most people I've talked to as projected. It's really in the past few months where we've seen in our markets more, rents softening and concessions rising, which also kind of makes us hesitant to do a lot of projects that aren't, day one necessities. Although we have started back up some of our CapEx projects. We're just starting to do some exterior renovation on one of our properties right now that we had put off from March. And it's kind of the same on the buying side. We were actually under contract. This kind of ties in with Joe's question, going into March and April. And lending, at that time was just like the Wild West. Everything was shutting down. Loans were getting pulled. The rates were, adjusting. There's all these requirements that people were coming out with, daily. And so we ended up backing out. And it seems like since then, they're definitely strict on the requirements. It's hard to get financing, traditional financing, I would say, on any asset that you're seeing collections soften in the past 3 months. But if you have a deal that has seen kind of steady collections or even rising, we've been able to at least get what seems to be pretty solid quotes. There's still some reserves mixed in there if you're going with agency, but it's definitely gotten a lot prettier since April and March.
Nice. Abels, any changes for you?
I mean, yeah, in terms of my underwriting, I guess we're still putting on offers. In terms of my underwriting, we're looking at like the annual rent growth is still like 0%. We're leaving the sales cap rates at whatever we're buying the property at. So, I mean, there's so much competition out there. We just figure, at sale, we're assuming like 10 basis points every year. So if we're going in at 6 cap in the first year, at sale for the 50, we're still assuming like 6.5. So that's.
Yeah, I think that's been interesting because our underwriting practices have changed a little bit throughout this, right? Because it's not the same market as it was even, 8-9 months ago. And so, you have to wrap your head around the fact that, we're still going to continue to see cap rate compression, or at least that's what most people are predicting. I think that's been the challenge, is trying to figure out how do you really underwrite and be conservative, but still be able to anticipate what may occur over the next, couple of years, which we still don't know. So, but interesting time. So Joe's got a great question here. I think, Nick, you kind of started to hit on this just a second ago. And I think this one actually be geared more towards you. Have any of you closed a deal since March? And if you have, what did the debt look like on the deal?
I have not. I'm still looking first one done here in Houston. So no, I have not closed one yet, Joe.
Yeah. Unfortunately, we have not either. I know Jarvis, Lynette, unless you guys have been flying on the radar, I don't believe you guys have either, right? No. So Nick,
Correct,
you
we
have.
not.
Yeah, Nick, I think you have, right?
Yeah, we closed on 2 smaller properties out in LA in August, and then we actually just went under contract today on one, but we haven't closed that, so I guess that doesn't count. And the debt was actually fine. Like I said, at the beginning of COVID, it got really crazy, and then towards the end, especially as I don't know where it's going to be now with cases spiking, but also vaccines coming online. Who knows? But when cases were dropping and everything was starting to reopen, lenders started getting a lot, I don't want to say loose, but looser. And so the terms were great. I mean, they were fine. I mean, considering where rates are, it's hard to complain.
Yeah, I think Joe is working on a 68 unit right now, right, Joe? And up in Kansas. And Joe's kind of battling through the loan process now, and 18 months of principal and interest reserves, right, Joe?
Yeah, that's right. Yeah,
Yeah.
we have another smaller one under contract, and that's going to be community debt, and those terms are much better. So we've kind of pivoted and underwriting with community debt because they're just for the time being just seem to be more ideal. The raise is much lower.
Yeah. That's a great point, Joe. And I think right now is a fantastic time to really be building relationships with some of your community banks, as I think some of the community banks, is what we've been hearing and observing, is that they're trying to be competitive with agency debt, being that the reserve requirements are much higher right now. And so they're offering a more competitive terms than probably what they normally would, which could yield some potential opportunities there. So definitely a great time to be leveraging some relationships with your community banks if you haven't done so already. So, but cool. Well, Jarvis and Lynette, what is your ideal investor avatar and why?
Ideal investor avatar.
Told you I'm going to put you on the spot tonight.
That's a good question.
I have no idea.
Anybody and everybody that write you a check, right?
Yes. I think just someone who's too sophisticated, who knows exactly what they're doing. We wouldn't want somebody coming in, giving their all of what they have saved up, and then are breathing down our back because that's all they have. We want somebody that we feel comfortable just going into business with, because essentially that's what it is. Everybody's a limited partner or a general partner, and just really there has to be some kind of good level of communication and sophistication that goes along with it. But I think that's pretty common, I guess, if you will. So
I think to that point too, just a mutual level of respect and trust is the key thing as well.
Yeah, it's all about relationships, right? So, Abels, how about you, buddy?
Yeah, I might be going the other way on that. Mine is a sophisticated investor, not sophisticated, accredited, bad, and they've owned previous businesses, and I'm talking retail businesses, and they're looking to get out of it and into apartments. So,
okay, awesome. Nick, I know you have some experience raising some capital. What's your ideal investor avatar?
Yeah, for us, it's typically, younger professionals or a lot of like accountants, doctors, lawyers that are, have high incomes. They like what they do, and they're just looking for a really efficient way to grow their wealth. They're more concerned with making their funds work the hardest for them with the least amount of effort, and not so concerned with the high cash flows. They like consistent cash flows, but the difference between like 6 and 8 to them isn't as important as the overall return and tax benefits,
Mm-hmm.
and
Yeah.
investing in strong markets.
Yeah. Yeah. I think that level of sophistication with whatever type of investor you're looking at is very important, right? If they understand this space in particular, what it is to invest, whether active or passively in multifamily is important, and, I think that's a good, good avatar. Good to start. Let's see. Yilvi's got a great question here. How do you see the number of forbearance and delinquency numbers going up affecting the number of supplies coming in? Latest report is around 3 million people that have signed up into the program. So if I'm understanding that question correctly, Yilvi, are you referring to forbearance and delinquency numbers affecting the amount of deals that are coming to market?
Correct.
Yeah. All right. Nick, you want to start that one off?
Yeah. I'm, predicted this pretty poorly before, so I don't know if I'll do a great job now.
You mean you don't have the crystal ball?
I do. It just tells me all the wrong things. I think, of the few distressed deals we've seen, most of them have, they've been interesting deals that, took like loan assumptions or things to close. So I think as those, start hitting the market, it really depends on how they were, what the debt is like on them, and what market you're in. I think that's kind of the weird part where we are right now is, like we mentioned, we're seeing collections soften, but prices go up. So it's kind of hard to tell what effect that's going to have. And if, and it definitely depends on like a second round of stimulus, if that's coming, or if things continue to reopen despite, cases going the other way. I don't know. I guess I've found that you just got to keep your pulse on the market and see what's coming. But I don't know personally how much of an effect it's going to have.
Mm-hmm. Mm-hmm. Jarvis, Lynette, you guys got any opinions on that?
I'm sorry. I'm currently babysitting right now, and I'm trying to connect to the monitor, so I have a lot going on. But anyways, I think it's kind of hard to predict. Again, kind of like what Nick said. I think I had my own idea of what it could have been now a few months ago, and I just don't know what it's going to look like in the future. So I don't want to say anything and kind of put my foot in my mouth on that one. So,
Abels, want to take a stab at it?
Okay, my bad. I was frozen. No, so I mean, I guess just by looking at that question, I'm seeing that if this probably not right, but like, I mean, if forbearance and delinquency is going up, to me, that seems like there's a lot more people that can't pay on their deals that they start coming to market. So if that's coming out there, it's more deals for you to analyze, more deals to put offers on. So I would say, keep looking out.
Yeah. I would echo everybody's sentiment in that again, this is just such a hard thing to predict and see where we're going to go. And I think it's really going to be dependent on where are our job loss claims at, our unemployment claims at, going into Q1. Like Nick said, is there going to be any more stimulus implementation? And I think it's just going to be interesting to see. That's a tough question to answer. I wish we had that crystal ball, though. Great question, though, Yobi.
Yeah, I think even with like the government bailouts and everything, I'm not sure what's in the pipeline, moving forward.
Yeah. I think another big factor too is going to be is what happens if we go back into another lockdown, you know,
Right.
and that's going to be a big question mark. Right. And I know that one of Biden's administrators or task force advisors is already recommending a 6-week economic shutdown again. So it'd be interesting to see if they put that into play and how that will impact that. So
I've seen Abbott multiple times this week. At least 3 times Abbott has said he's not locking the state down. So it'll be interesting to see how, if Biden recommends a lockdown and Abbott says no, we're not locking down, like what happens in that situation. So we'll see how it plays out. Yeah.
Well, hopefully with the release of Pfizer's announcement with their vaccine that is above a 90% efficiency, which is due to come to market as early as December, hopefully that will improve a lot of the general sentiment and reduce some of the fear, and hopefully it'll allow things to at least continue as is, if at a minimum, you know. So I definitely think that'll help improve the overall feel of what we're feeling right now. So again, we'll have to see. Interesting times. So, Bruce has got a good question here. Most likely never mind. That wasn't a question. That was your statement. Most likely they were distressed in the first place. So the forbearance is just putting off the inevitable. Another deal is coming to market. Yeah. Pretty good point. Yeah. I think that's another interesting thing too, that we've seen, you know, you guys can chime in as well, but I don't think that we've seen a lot of multifamily operators utilizing the forbearance. I think most people were pretty well capitalized, you know, with the stimulus package that was implemented. Collections were at least steady enough to continue to cover the debt service. So in general, we haven't heard of a lot of people utilizing the forbearance. So it'd be interesting to see what happens, but yeah. So cool, guys. Well, anybody else have any real estate related question before we pivot into some personal questions here?
I just wanted to say one thing. So the same guy that I was referring to earlier that said that in Harris County, they've 75% of apartment complexes have traded in the last 5 years. Also said in the last year, there's been 22,000 new A-class apartments that have been built. So, you know, people are still building, and as long as developers are getting their investors, you know, returns, I think, you know, absorption may be a little weaker, and, you know, maybe A-class properties. I'm interested to see how things pan out here. But I just kind of wanted to add that tidbit.
Mm-hmm. Yeah. Great point. So cool. Well, let's have a little fun here, guys. Let's get a little personal here and kind of dig in here and get to know you guys really, really well. So, Abels, if you had one superpower, what would it be and why?
Oh man. I think I come up every time I watch a new Marvel movie, I'm like, I want that. I think I would go with like the one superpower is just the one that Captain Marvel has. I don't know what that is, but it's just like she's just freaking powerful, and she can do whatever, like she was able to stop Thanos. Whatever that power is, I want that. And that's what it is.
Awesome. Cool. Nick?
Man, if I had to think, you know, super hard on it, I would say probably Magneto. I think that's pretty cool power. I'd take that.
There you go. That's pretty cool. Jarvis, Lynette?
So I was gonna say read minds, but since Nick had Magneto, I'm gonna probably go with teleport, so I could just go wherever I want to go on vacation. Just now, you know, get off work, I go spend the night in France somewhere, come back, go back to work the next morning or something. I think that would be pretty cool.
You know, Lynette ain't gonna let you go and do that. Even if you had teleportation power, she got a chain around you, man.
Well, I was gonna say I would also want to be a very powerful. I'd want to be Jean from X-Men, to be able to be the Phoenix. So, you know, I think that trumps all of them.
Okay, very cool.
What would you say, Cody?
Oh, Superman, man. Big Superman fan. I'd love to fly and have this unearthly strength, and you know, yeah, That's my guy.
So I guess that's the common superpower amongst syndicators. They want to do everything. So
I'll ride with that. I'll take that. What is one place that you haven't been that's on your bucket list? Let's go. Jarvis and Lynette, go.
Bali, Indonesia.
Bali, or maybe Santorini, Greece.
Nice, nice. Abel's?
for me, it's this place up in northern India called Shimla. I've seen so many movies that are based out of that area, and it's mountainous. It's got blue lakes. So that's the ideal spot I want to go to.
Nice, nice. Nick, how about you, man? What's on your bucket list, buddy?
You talk about places to go, right?
Yeah, places you haven't been that's on your bucket list to go.
Okay, cool. Sorry, I got two kids trying to murder each other in the back, so I missed the question.
It's a family environment, man. It's all good.
Bucket list place. I've always wanted to go to New Zealand. I think that'd be cool. I don't, in particular have a place in New Zealand I'd like to go, but that's on the bucket list.
Nice, nice. Let's see. You'll be put in here Patagonia in Chile. Yeah, I heard that's beautiful out there too. Yeah, nice, nice. I'd love to check out Europe, but more specifically Venice, Italy. I would love to take, and I owe my wife a European trip, so I know she's holding my feet to the fire there. So, but definitely would love to check out Europe and Venice and whatnot. But
if we all stay consistent in the multifamily space, we'll all get there hopefully sooner rather than later.
Amen to that, man. Yes, sir. Yes, sir.
Go to the best spot here, the best place in Venice. It's in Murano Island. You definitely want to go there and spend some time there.
Murano Island. I'm going to have to write that one down. I appreciate that, Yobi.
Yeah, it's definitely 10 minutes ride with the ferry. So.
Cool. I can't tell my wife that because she'll expect me to book the trip next week, but I'll keep that in mind. I appreciate that. So, all right, guys, if you could go back and change anything in your real estate investing journey, what would it be? Abels?
For me, it was, I guess, I feel like, becoming more focused in what I wanted to purchase. I think that's where I want to focus on. I think when I first purchased that first LP, I liked the deal. I loved it. Now I wish I'd done also at the same time focused on another smaller multifamilies that I could take over and figure it out on that end as well. So,
Jarvis, Lynette, how about you guys?
Yeah, I think for me, backstory, I grew up in a family that did real estate my entire life. So I saw it growing up and I knew I wanted to get into it. So I always had the plan on getting into it sooner rather than later. And then, life happened and, I got into it still at a young age, but if I could go back, I probably would start sooner and I probably wouldn't do the single family space first. I probably kind of just jump right into multifamily, maybe 20 plus units to start off, something a little bit more manageable. Just to speed up the learning curve on, multifamily investments and syndications and whatnot, to kind of, save time. So.
Nick, how about you, man? What's one thing you'd go back and change in your career?
Yeah, I wish part of me wants to say going to multifamily earlier, but I didn't really have the best mindset at that time, so it probably would have been a disaster. But I did move from Denver to Austin in 2014. But prior to that, I was living in this place called, Glendale in Denver. I don't know if anybody's familiar with Denver at all. It's this tiny little pocket, and we were renting this house for years. And the owner offered to sell it to us for like $150,000. We're like, oh no, we're moving to Austin, and that property is worth like $700,000 now, and it's like this little 800 square foot house in the middle of Glendale. So I guess that's probably the only big regret I have is not buying that at the time. But that's about it.
Awesome. Yeah, if I could go back and change one thing, I would have stayed laser focused on multifamily in particular. I was introduced to multifamily in 2011, and if you guys been around long enough, around that time, arguably probably one of the best times to buy commercial real estate. You know, if you look at depreciation over the past decade, I mean, you could have made a lot of mistakes and still made a ton of money. And you know, I was young and naive and chasing shiny objects. So if you dangled it in front of me and said it, you know, it came with a gold package, I was all about it. And you know, it unfortunately kind of led me down a couple of rabbit holes that I had no business going down. And so I would have stayed much more focused. So for anybody here on there, that's my biggest recommendation, man. Just, you know, put your head down, just keep sticking to the pavement, and you know, just stay focused, be patient, stay focused. So, but well, great guys. Well, that is a little bit more about your co-host of the South Texas Multifamily More community, and really good conversation, guys. Had a lot of fun there, and I hope everybody picked up a few things along the way. But looks like Nick's had to drop off. His kids are going going a little crazy there. We all know that feeling if you have any children. But hey, listen, right now we've got about 20 more minutes. We're going to break out into some breakout rooms for give or take 10, 15 minutes, and then we'll come back here and we'll wrap it up. So I'm going to do that now. Here we go. All right.
Hello? There you go. Hey, Sean, how are you?
I'm good. How are you?
Good. Where are you located?
I'm in Albany, Georgia.
Georgia. All right.
Yep. Yeah. How about yourself?
Houston, Texas.
Houston, Texas. Okay. Great.
So are you a bulldog?
This no. I'm more of a Gator, Florida Gators actually. So
I'm a Gator. Oh, well, you won't
Yep.
like me anyway. I'm a Buckeye, so.
Oh, okay. My boss actually a Buckeye. So
Oh, there you go. Yeah, we tend to get around.
that's right. So this is my first time actually coming on, with Cody actually. So I've been invited many times, so I highly enjoyed it. I really have. So I really enjoyed it. I wish I could have been coming on before in the past few weeks here. So, but other things been happening. So, but yeah.
Sure. So are you an active investor or?
Well, I'll tell you, Tony, I give a little bit of rundown. I started about 3 years ago. And I started by I say by mistake, but my mom actually had some property and she couldn't have she didn't have the funds, the money, nor the time to keep this one single family property up. And so what happened is that she said, "Hey, you want this property?" I said, "Oh yeah, I'll take a shot at it," and I did. And Tony, I tell you, it was like me just touching something and turning it to gold. And I kind of got it fixed up, and maybe a month and a half, 2 months time frame. Put a tenant inside, and then it's like a tattoo. I went and got another one, a few months later, the single family property, and I purchased that one. It was a fixer upper, paid 25,000 for it, and I
Whoa.
put in probably another 10 into it. And same thing, when I got a tenant, put my tenant inside that property, and I said, you know what? I want to flip this one, you know, and so I flipped that house, and I walked away pocketed over maybe like 32,000. I sold it, and I pocketed like 32,000, and I went back and sold the first one too that my mom basically gave to me, and I probably walked away with that probably a good 20,000 in my pocket off of
Okay.
that one. So, and then I, and these two properties was down in Florida, and so I live in Georgia, and so I went and purchased some more properties up in here, and then I said, okay, everyone keep talking about multifamily, I keep buying single family, and so make a long story short, this past summer I bought my first multifamily. It's small, nothing big. It was a triplex. So
That's all right. How
and
many units? So that was 3?
yeah, just 3. Yep,
Okay.
just 3. And
How
so
was the financing on that? Because I've heard that,
ooh,
you know, the banks really like everything that's kind of 5 and above.
yep. So let me tell you what happened. So this
Okay.
older, it's kind of funny, but this older lady who didn't know me from Adam, she was trying to sell this triplex, and it sat in the middle of downtown area, the small town in Florida. Long story short, I asked her, I say, will you owner finance this for me? And she did. And I came to the table. I'll be totally honest with you, frank with you about this. It was 130,000 for this triplex. And I came to her with 15,000, and she did a great interest rate with me. I think it was like 6.5, something like that. She did, and and I had her since then, and I've been making. And she was getting probably like $500 a month for each unit. And so I went and put some money inside, you know, new paint and new flooring, and I jacked the rent up like $150 for each one. And this has been a gold mine, this triplex. And matter of fact, Tony, I'm getting ready to put, it's on an acre lot, and I'm getting ready to put 3 mobile homes on this on this lot as well.
How big's a lot? Like an acre?
Yes.
Oh, that's nice, dude.
Yep, it's an acre lot.
So,
and go ahead.
yeah, no, that's awesome. That's actually inspiring. So, because I'm completely new at the multifamily. I basically found this group through Meetup one night, and you know, I was like, oh, I'll listen to it. You know, I've been I'm an IT director, and I've been involved in all kinds of, you know, multiple projects and stuff for large companies. So, you know, working hard and doing all that doesn't bother me, and doing my research. As a matter of fact, my wife and I, for our COVID project, you know, you hear about people that for COVID, they, you know, painted the walls, they redid their cabinets. Well, my wife and I decided, we'll go get our real estate license. So we did that. And so, and it's been great because unfortunately, due to COVID, my wife lost her job, so she's doing it full time. But we're having fun, you know, as a husband and wife team trying to do it. But so I'm really focused in on, you know, I want to get into this. My wife and I have been talking about real estate forever. Matter of fact, I own 2 condos up in Cincinnati, Ohio.
Cool.
And I'm actually expecting a contract tonight on one of them, which I'll make some money on, which is nice. So, you know, I'm really looking to sell that and start, you know, bringing it in. But I don't want to do single family really. I want to get into, you know, the multifamily, because everything I read
Yes.
and everything I hear about is awesome. So, and I don't want to do the
Well,
big ones yet.
that-
I mean, I guess what I'm looking at is, you know, if I could pick up like an 8 unit, 20 unit, you know, something that I think mentally it sounds feasible, and
yeah.
manageable, you know, it wouldn't take a large
Right.
investment from a group of people, right? Because that's really my
Right.
problem. So,
hmm
but man, sounds like you landed on something awesome.
I think so too, and it really, really, really has worked for me so far. And I have 7 single family homes still, plus this triplex. And
Right.
I tell you, if I buy another single family home, they have to kind of give it to me. There's no way I'll put the money and time into it, because it's not where it's
Yeah.
at. This multifamily is definitely where it's at. You know, prime example, I had a tenant move out, you know, recently. And when she moved out, at least I had the 2 other doors still paying me rent. If that was a single family
Exactly.
property, of course, you know, you're not getting any money, you know, and I had that happen as
Right.
well over the summer. So
Well, and
yeah,
that's the
so
thing. So
you,
my
you,
wife, yeah, my wife was working for a property management company, and they were small, right? But she worked
mhm,
with the tenants. So, you know, she knows the you know, you always hear about the pros and cons. Well, she was in the cons, right? She heard all the
mm,
stories. She knows everything, and she was knee deep in the COVID, and you know, hearing about, you know, people that couldn't pay rent, you know, negotiating with owners and stuff like that. And I'm just like, you know,
right.
the fallacy that, you know, people that own rentals, the fallacy is that we all have money, right? And it's okay if we miss
hmm
our rent. Well, no, it's not, because let me tell you, a lot of those owners are just, you know, they're $100 away from their mortgage, right? And so they
Yeah.
can't take that risk. So that's the reason why I also look at it like you, right? It's a numbers game, right? If
Yep.
5%
Yep.
of my doors aren't leased, that's okay, because you know the other 95 or 85, whatever it is covering that.
That's
So
right.
man, I tell you
Right.
what,
Right.
um, what the information that we have now, meeting you, meeting Cody, meeting the others, man, if I would have known that getting out of the Air Force when I did, I would have bought long time ago. God,
Well, listen,
man.
same here now. Same here, because I really just got into this game 3 years ago. Now I'm 46 years old, and I was in the Navy, and
Oh,
now
thank
my
you for serving.
9 to 5. Oh, thank you, sir. You know, and now my 9 to 5 is, you know, is law enforcement. But if I would have started
Oh,
this after the Navy, and when I got into law
oh yeah.
enforcement back in 2001, I would be a whole better place than where I am now. And so
Oh
sometimes,
yeah.
Tony, I try not to look back, you know what I'm saying? So, but I feel you, brother. And going forward, we got this, bro.
Yep.
We're got this now, because we where we at now, there's no turning back, you know what I'm saying? And you got good people
Yep.
rubbing elbows with, and you're gonna be fine. Yep, you really are. You know, today I got a little frustrated today, and one of my he's like a secret mentor, a guy named Maurice Philogene, and he's on LinkedIn as well. And he texted me out the blue and asked me how everything was going. I said, you know what? I'm a little frustrated, you know. And I think there's a deal down in Florida. I'm looking at getting it's a 8 unit studio apartment. I'm been trying to look at getting, and I think the guy is asking a little too much for it. But long story short, that
Right.
frustrated me, because I really, really have my eyes on this place, you know. So, and but when you got good people that's been in the business for a while, you know, to talk to you, I call it talking you off the cliff, you know what I'm saying? Keep them jumping, you know. So, and
Yeah.
it's gonna be fine. Yeah, it's gonna
Yeah.
be fun, bro. Yeah.
So it's interesting that you're still looking to invest in Florida, even though you live in Georgia. Do
Yep.
you find that to be a little more stressful, or do you have, because you're not really there to see your property, or are you paying a property management company, or?
Well, the reason why let me go back. So Florida's home, and so
Okay.
and my wife is from Florida as well, and so
Okay.
I'm eligible to retire in 3 years. And when I retire in 3 years,
Nice.
we're going to go down to Florida to retire, to retire in that state. So
Yep.
my eyes is down there because that's what I really know, Florida. Now I have been here for Georgia for 15 years as well. And, I know places like DC. I've been there, many years, working up there as well. But Florida, I know like the back of my hand, and that's where I'm going to probably rest and lay, and retire down in Florida. And so that's why. And answer your question, I do have a property management down there as well. So yes.
Okay.
Mhm.
That's great, man. Well, certainly hats off to you, dude. You've been able to be very successful.
Well, I appreciate it, man. But I think next year I'm really, really going to be putting a lot of energy, a lot of time into this multifamily, and I'm going to bring you with me, Tony. So,
All right,
What's up, Sean? Nice to see you, man. Or hear you.
Brian, what's up, brother?
What's up, man?
How's it going?
Living the dream with my buddy over here, Cody.
That's right. That's right. I was going to say, Sean,
Really?
you better be putting your focus in multifamily, man.
Yeah, it was good talking to Tony there, man. Yeah, so yeah.
Yeah. Great guy over there, Tony. Really good guy there. Sean, you as well. Everybody here, man. Really great group tonight. Really appreciate everybody participating and, again, spending some time with us. I hope you guys had some fun learning a little bit more about our group, and hopefully you guys picked up some nuggets and some good networking. And I feel bad because we got a couple people chiming in, but we're about to wrap it up here. But
Hey, Cody, before we wrap it up, if I could ask, if you guys are willing, definitely put your contact information in the chat, and you can always, where the three dots are, save the chat so you can, contact everybody afterwards. So.
Yep, great point there, Abels. I appreciate that. I was going to hammer that in. There we go. Yeah. So as everybody's kind of dropping in their contact information there, just want to remind everybody that next month's meetup is going to be on December the 19th. That's going to be the Thursday before Christmas, same time, 7:00 Central Time. We've got a great guest coming up next month, Mr. Garrett Griffin. He is a tax attorney who specializes in deferred sales trusts. And if you aren't familiar with deferred sales trust, it's another alternative to 1031 exchanges. And you're definitely going to want to make sure to tune into that because it's a very, very powerful tax deferral strategy that I think a lot of people are going to be very interested to learn more about. So definitely make sure to join us on December 19th. We'll shoot that invite out on social media and on our email campaigns as well. Here, hopefully before the end of the week. Brian, hold me to that, okay? So we'll get to work on that. But
I got you, man. I got you.
But anyway,
Cody, is it December 19th or the 17th?
it's I think it's the 19th, right?
You said 19th. That's a Saturday.
Oh, just joking. 17th. Just joking then. Yeah, must have been looking at the wrong calendar. Yeah, December 17th. Thank you. So, but looking forward to seeing you guys all there December. So. Well, with that, guys, we'll kind of wrap up. Again, want to thank everybody for participating. Looks like we got more people chiming in their contact information. So we'll leave it open for about another minute or so people can save that. Yeah, looking forward to the next one. Happy Thanksgiving to everybody. I hope you have a very safe holiday season and, enjoy the times with your family. So very thankful to be involved in this network with you guys and, just God bless everybody. So
thanks, Cody.
Thanks, everyone.
Thanks so much.
Hey, everybody, have a good one.
Thanks, everyone.
All right. Happy Thanksgiving. Bye.
Y'all have a good one.
Bye.
See you, everybody.